Policymakers will maintain their influence on the markets and will monitor their decision very carefully. On the policy side, the most important event this year has certainly been the U.S. imposition of tariff against most of its trading partners, and the story is still not over at this time. The most important tariffs have been imposed on China, and this is where the risk of escalation really lies. Today, production chains are global. So at this time, we still don't know how those tariffs imposed by the US on their partners will impact global growth. So based on what we've been seeing on the employment side in both Canada and the US, which are still very, very positive, we believe that this trade skirmish has not derailed the global growth of the world markets. But we'll certainly be observing that very, very closely over the next few months to assess our positioning. Since the beginning of the year, there's been a lot of discussion about the ups and downs of the NAFTA negotiation. And at this time, we still don't have a clear view on when and if this will be over soon. But in any event, Canada, Mexico, and the US are natural trading partners. So in the longer term period, that issue will be resolved at some time. Oil has always been driven by geopolitical events, mostly driven by the Middle East, and this time is not different. OPEC 2.0, which includes Russia, have kept their deal not to overproduce. Also, the Saudis have agreed to compensate if Venezuela and Iran stop producing the level they are right now. For oil, over the next 12 months, we certainly should expect volatility, but the price will still be fairly range-bound, and the probability that it hits $100 over that period is fairly small at this time.